Good morning, traders. This is Brad Matheny. Today is Sunday, the 7th of July. This is the Plan Your Trade video for July 8th through July 24th. Yes, that includes everything from right here all the way down to this end of the week of the 24th. Now, I will likely continue to update these as we go forward. I'm going a bit further than I did last time. Last time I only did 2 weeks of forward, looking to try to guess and to estimate as to what would happen. This time I'm doing 3 weeks. Now, all of this information and even more detailed analysis can be found on my website through my subscriptions, my expert growth subscriptions. If I've been helping you over the last couple of weeks, I urge you to take a look at those and maybe consider joining. But as of right now, I'm going to go back to the chart and show you my expectations. So the way I see the market moving is we have a push up into early Q2 earnings, which will reach an apex right over here with this exhaustion rally around the 15th. Here's Friday. There's the exhaustion rally day. I think that's the end of our rally phase. Right in this area is going to be the peak. That's going to be the 11th through the 15th, Thursday, Friday, Monday. Then we move into an exhaustion downside move, likely retesting down here the 353, 354 area. Then we move into sideways consolidation, eventually rebounding back over here off of this support channel and attempting a new rally phase at this point going forward. So I'm basically giving you two key areas for trading. Okay, number one, this area right here. This area right here is a continuation of a bullish trend, which allows us to take advantage of upward movement over the next 2, 3, 4, 5 days. Now, we do get right here what's called the exhaustion rally bar. Okay, this exhaustion rally bar could be a pretty good move. It could be an open lower type of scenario and a nice solid rally, maybe 1.5%. So be aware that the 15th is a good opportunity for potentially picking up early morning call options, possibly, and setting up, maybe around a 3/4 to call it 0.75 to 0.85 kind of a target range. Then we move into this immediate downward sloping trend. And this immediate downward sloping trend is going to be essentially a pullback taking place. This pullback is going to only last for about 2 or 3 days, I think. Try to get these the same color. And then we move into this sideways channel. Now, this sideways channel is going to be consolidating roughly in this area, moving out towards this eventual base, which will come into play right here. Now, I would say that this would be somewhat of a flagging formation, kind of hard to estimate at this point, but we can come right across these levels, set this up as a, I don't know, a bright blue, I guess, flag. And then I will set this one across these peaking levels, coming into a flag kind of like this. And I believe that is a very likely outcome. Okay, let me get rid of that. And yes, that looks good. Okay, so where we're at, this was the line that I drew earlier from 2 weeks ago. And this is basically my expectation going higher up into this area. Nothing has changed there. We have 1, 2, 3, 4, 5, maybe 6 days of upward trending, where these 2 days could be volatile and mixed. Then we get into this exhaustion pattern here, which is a broad intermediate pullback, possibly setting up the low of this flag. And I think that was a very reasonable outcome. Then I think we move into a sideways channel. Now, this sideways channel here, as I'm trying to highlight what we're going to be doing here, eventually hitting this support channel right over here. This sideways flagging could take various forms. So I'm estimating that this is going to be the outcome, sideways like this, but we could end up seeing something more along the lines of a downward bar, kind of like this, testing these lows and eventually maybe breaking to the upside. So understand that we have in this area here, I'm going to just warn you that you have a range roughly from 550 to 562. It's a fairly broad range. We could see quite a bit of volatility taking place in this area. And again, I just want, no, the green one. I just want you to be aware that we could be testing these deeper lows throughout this time frame, trying to establish a flag. Now, this blue flag looks very realistic to me. Okay, it looks like, following these channels across here and this rejection, this would be a logical format for price to flag out in a sideways manner, given my expectations going forward. And again, that's kind of what I do. If it looks reasonable in terms of price, then I think we're going to be okay. Now, what also looks reasonable here is this. Okay, and I'm going to show this to you very easily. So hypothetically, we need to have a measured move. Okay, it is very important that we have a measured move. So I'm going to show you a measured move right here from this rejection point up to this rejection point right here. Okay, that's our move. Now we want to see this be a complete measured move. So we come up from this rejection point to where my upper levels are drawn, and look, it's 100% measured move. So this move is one leg consolidating. This move is a second leg. It's exactly the same. It's 100%. Now I can move it around a little bit, pick a different low if I want. But the reality is this move, this extension up here to 568, 567 is a 100% measured move of this last move. Okay. And that's where we got this big gap activity here. We may see something like that over here, another gapping formation, maybe even up in this upper zone, 570, 574, possibly setting up way up here. And that's a viable potential to see it actually gap up. But then I think we're going to move back into and try to retest this zone. I think it's critical that we retest this zone as we had back over here. And as we kind of came close to back over here, I think this is critical to come back down here and at least test this zone moving downward. Understand that if we move a Fibonacci level up to my projected high, that would be right below the 5.0 level, possibly touching the 618 level as a rejection point for a new bullish trend. That makes completely logical sense to me as far as I know with price structure and Fibonacci price theory. So be aware, this could be a very tough period to try to trade. It'd be great for, 1 and 2 minute swing charts on options. But remember, we do not have much opportunity except for right here, this uptrend, this downtrend, and then eventually this uptrend, which is right here, carrying the trend higher. Okay, that's going to be our next big uptrend is right here on or near the 23rd, 24th. You should be preparing for this move on the 25th, which is a bottom setup leading to potentially a new move, likely again 100% higher. So now where would the 100% move be? Assuming that this is our rejection point, we're going to be moving back up to this area, which is right up where I drew. Remember, I keep telling you guys, I see charts in a structured format. I've been doing this long enough that I kind of see things inherently, just the way I do it. That's why if you look at where I drew this in an earlier video, it's exactly 100% measured move that we saw back here and we saw right here. So I'm doing the same thing, 100% measured move. And then look, another probably 100% measured move right up to here. So take a look. Does this look like 100% measured move to you? You know, 100% measured move right up to the 606 area. So these are nothing more than replications of the lagging 100% measured move structure accelerating upward. Once we get past this level, we're going to be targeting this 776 to 781 area. Sorry, 581 to 576 area. Once we get past this consolidation period, we're going to be targeting the 599 to 604 plus area. And that's going to be my 606 target up here. Okay. So it's nothing more than the same price structure over and over again. Okay. Measured move. Look at it this way. And I could probably even go back further. So look at it this way. Measured move up to here. Control CV. It keeps having to draw. Measured move right to here from rejection points. Control CV. Measured move from here to here. Control CV. Measured move from roughly here to there. Control CV. And measured move again from roughly there to there. So again, it's basically legging all the way up. Leg up, consolidate, leg up, consolidate. Now, these moves can be Fibonacci expansion. So they can be 1.382, 1.25, 1.50, but typically 100% measured move is very common. So you can see here, this one off of this bottom actually kind of rolled here. And if you do the math, okay, this would basically be about 125% move here, moving into a measured move here, moving into a measured move here, moving into a measured move, and then a fourth measured move. So again, you've got to look at price and see what is actually going on to make a determination. And like I said, this is what I see as logical. Moving up 3 or 4 or 5 days, reaching a volatile topping pattern, a last engulfing pattern setting up here, the exhaustion rally phase setting up here on the 15th, moving down into early stage consolidation, stalling out in a sideways, fairly volatile pattern, tightening up a bit in this area, and then moving into a bottom pattern and a new rally pattern out over here. So this gives you an idea of what you need to be preparing for and what to expect over the next 3 weeks. And of course, I will continue to monitor these every day. Now, I have to tell you here at the end, it is very difficult to predict 3 or 4 weeks into the future. Okay. It is very difficult. And I challenge anyone, if you think you can do it like I do with any type of accuracy, like I did back here, predicted 2 weeks into the future, that's about my normal. 1 to 2 weeks into the future, I can do pretty good. 3, 4, 5, 6 weeks into the future, that gets a lot more complicated. So we're now 3 weeks into the future here with this consolidation. That's why I'm warning you. This range could look completely different than what I'm expecting right now. But I still believe it'll be consolidation. It may be, up in this range. So hypothetically, the consolidation range may be more in this area than my tight little area that I've drawn here. But I think that we move into consolidation prior to the big rally phase taking place on the 24th, 23rd, and 24th. And then I think the 25th is really where we start to rally out into a new expansion phase. So that gives you a very clear idea. Rally, 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 last engulfing rally, pause, pause, downward trending, consolidation, pausing, pausing, pausing. And by the 23rd, 24th, you should be starting to prepare for what I believe is going to be a new rally phase targeting the 578 to 582 area then a move up to 600 to 604, 605. And I think that's going to be a very solid move. This is going to be really, I think, quite quick. Whereas this is going to be more of a slog here over the next couple of weeks. Okay, guys, that's it for now. Talk to you later.